This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Good morning. I'm Gord Long with GordonTLong.com. As part of our ongoing series on financial repression, I have Jeff Berwick joining us this morning from sunny Acapulco, Mexico. Jeff is the publisher of the Dollar Vigilante website. He's been on us before. Welcome back, Jeff.
Thank you, Gordon. Great to talk to you again.
It's how quickly 1 year goes. A year ago next month we talked.
Yeah, time flies, especially with everything going on in the world. It just seems to be speeding up right now.
I think that's what it is. There's just so much, and to me, it is speeding up. Look, I want to reference the fact that we have your previous file within our archives, but for those who haven't seen it or aren't familiar with your background, could you just give them, our listeners, a brief outline of the things you've been involved with before you started Dollar Vigilante?
Sure. Yeah, I started off, I started the largest financial website in Canada called stockhouse.com in 1994. And so it was sort of like the street.com or CBS Market Watch of Canada, and still is to this day the largest financial website in Canada. But I sold it in 2002. I went for a trip around the world, sunk my sailboat in El Salvador, went to about 100 countries. And then I started to read up on Austrian economics and start to look into what was going on in the world. I read The Creature from Jekyll Island was the first book I read. And it woke me up, and I said, there's a lot more going on here than what they report on CNBC. So I was predicting the 2008 crisis, and as soon as that happened, I knew I understood at least somewhat what was going on. So I decided to start the Dollar Vigilante in around 2009, and it got live on 2010 to warn people of an impending major crisis, a collapse of the dollar, a collapse of the Western economies. And in 2010, I predicted that to be sometime in the next 5 to 10 years. And we're now 5 years in, and I think we're getting quite a lot closer now.
Well, matter of fact, I think you just put out a video calling for September, some real music and events happening that close in, are you not?
Yes, I've been calling, I've been sort of sensing that something's going to break pretty soon just from watching everything that's going on over the last few years. But then I discovered something called the Shemitah, and I started looking into that. And it would take me far too long to explain the Shemitah to you. But essentially, it's a 7-year cycle. It's what they call on Wall Street the 7-year cycle. And I looked into more research on it, and there's actually exact dates on which there's crises. And the next date and the last two happened on the biggest market collapse in the U.S. The first one was September 17th, 2001. That was the first day after the U.S. stock markets opened after 9/11, and that was the biggest point crash in history on that day. And then the exact same day, there's an exact same day to this Shemitah in 2008 was when the next biggest market crash of all time happened. And on that day, it was very interesting how it all happened. So I'm watching the next date, and the next date is September 13th of this year, and that's a Sunday, which is kind of interesting because, as you know, is what happened in Greece. If there's going to be a major crisis or a major announcement or that something massive is going to happen, they usually do announce it on the weekend. But we'll see. I'm not saying it's going to happen on that date, but I've got enough evidence to show that there's enough going on in September to have me incredibly curious and concerned about what's going to happen.
For those who study technical analysis, September 2016 has been on the radar screen of a lot of technicians for quite some time, and but it is technical analysis, and you're doing cycle analysis in this. But when they all start to point, it says there'll be some kind of fireworks. That's a high probability, but we'll wait and see. Jeff, we're here to talk again about financial repression as part of our financial repression series. You defined it the last time that you were on and we had a discussion. I wonder if we could just briefly revisit what you see it to be, but what you see as the key things that have developed in financial repression over the last year that have really caught your attention.
Yeah, well, to me, there's been so much going on. It's when I started the Dollar Vigilante, I thought, what am I going to write about every day? And it's now 10 or 20 things every day. I can't even cover half of them. And they've been just, like I said, speeding up. So for the last year, since we last spoke, the system has gotten just more and more precarious. We're now seeing interest rates around the world going to not only 0%, but below 0%, which is complete Keynesian insanity. And that also shows that we're nearing the end of the system, because all of these governments, pretty much every Western government, is so indebted that they can't allow interest rates to rise anymore. If you look at the U.S. alone, they have $18 trillion worth of debt, but that's just their own debt. They also have liabilities that they have to pay for, or are supposed to pay for. They'll probably renege on a lot of them, including Social Security, or as I call socialist insecurity, and many of them. But their total debt and liabilities is $95 trillion. So just taking the debt that they admit to, that's $18 trillion. So if they let interest rates rise to 10%, which is not totally unheard of interest rate, that's nearly $2 trillion per year in interest payments alone. And that's pretty much the entire tax extortion theft-based revenue of the U.S. government is a little over $2 trillion. So they can't allow it to rise. The Federal Reserve has not been, they've been at 0% now for, 6 or 7 years. I said that in 2008, 2009, I said, I don't think they're ever going to raise rates again, because they can't. They're stuck in a corner. And now you look at it, and they're just talking about a 0.25% interest rate hike could potentially destroy the financial world. Everyone's panics if they even bring up that they might raise it to 0.25%. And the Federal Reserve has even basically sort of said, now we're not really going to talk about it until the fall. And their actual next major meeting is actually scheduled right after September 13th, on September 15th and 16th and 17th, I believe. So that's one of the things that I've been noticing about. There seems to be a lot all aimed at September. And you look at things like Greece and all that, and I think we're going to see Greece happen in Spain. We're going to see it in Italy. We're going to see it in Portugal. We'll see it in France, and this thing will just be a contagion, and we'll see it in the U.S. as well, in one form or another. And this is going to really devolve quickly now, in my opinion. And
I think Germany sees the same thing, and is the fear of God in them in their negotiations with Greece, of seeing what is going to happen immediately following. With the other peripherals that you mentioned. But, in Greece, we're seeing the threat of bail-ins is starting to accelerate. There's, word here that it may go down to 8,000 euros, that's what it'll take, or lower, that they'll have to seize to make these banks really solvent. And that's assuming, really, if they don't get the loans that are now being pledged, but assuming that some of the money from the IMF will be there. What's your views on the bail-ins right now, not only in Greece but around the world? Is that accelerating?
Well, the first real one that we saw was in 2013 in Cyprus, and that was a big one. And they took 50% of anyone who had any decent amount of money. They took 50% of their cash in their bank, which is unheard of at the time. Soon after, though, many countries around the world started instituting bank bail-in clauses. Canada has it. Australia has it. Mm-hmm. I'm not sure if the U.S. has it exactly. I haven't totally looked into that, but I think the U.S.
does have it, but was in 100,000, over 100,000, but they slip it out every day, and so you don't know what the amount's going to be. Sorry to interrupt, but yes, we have it.
And they won't stick to it either, right? As Greek people found out, the EU supposedly backs up every bank account and insures it for 100,000 euros. Well, the Greek people found out how good that guarantee was. There was nothing of the talk of that at all, and there's talk of actually doing a bank bail-in, in fact, because all these banks are bankrupt just by their very nature of fiat reserve banking. Every bank that does fiat reserve banking, which is pretty much every bank in the world except for maybe a couple, is bankrupt because they don't have enough assets to cover their liabilities. And these banks are super bankrupt. They have very low leverage or high leverage. They're at incredible amounts. So all it takes is, like, for example, the Federal Reserve to raise interest rates 0.25%, and it can bankrupt the entire financial system. This is where we're at now. It's been complete insanity. They tried to fix the 2008 crisis by printing money and going into more debt, which is why they got into that problem in the first place. And we're starting to see the next wave of major collapse and crisis. And I think it's going to be 2008 times 1,000, which is 208,000.
Well, there's certainly a lot of urgency in the bail-ins and the legislation, but Ken Rogoff from Harvard was presenting to the European finance ministers in Berlin recently, and the subject was a cashless society, and that is part of this war on cash. If you're going to stop bank runs, well, don't allow cash. Get rid of cash, and it's all locked in the banking system. What are your views on this whole subject? I'll call it the war on cash that's going on.
I think there's a number of different reasons for it, but the main one is this low interest rate, or they're trying, a lot of these countries are going negative interest rate now. So I think it was in Austria or Switzerland, one of them has a negative interest rate right now for large amounts. And so a fund manager in Switzerland just did the math on his, whatever it was, $2 billion in the bank, and said, well, this is costing me like $20 million a year to keep money in the bank, so I'm going to withdraw my $2 billion and put it in a warehouse, and I'll have like a $5 million security system for it or something, right? And the bank said, no, you can't take it out. So that's what they're trying to do, is make it so people can't take their cash out, because that's what's going to happen. Any normal person, you could imagine if you had some money in a bank and they were charging you 1% per year to keep it there, you'd probably just keep it in your house somewhere in a safe or something, or better, buy gold and silver. Obviously, the cash is going to be worthless pretty soon too. But if you did want to have some cash, why would you keep it in a bank if they're charging you? So what they want to do now is phase out cash. And so even in Austria recently, they've said they're going to phase out cash. We're seeing in the U.S., if you try to take out more than a few $1,000s, you're probably going to get reported to the government. They're going to come after you. They're doing all these civil forfeitures now. So if they find you with any amount of cash, if you have $1,000 and you're driving around in your car, if you don't have a good reason, like you just took it out of an ATM and you have a receipt, they will just take it from you. So they're doing this thing. They're trying to make it so people won't use cash anymore, so that they can control us. As the system continues to collapse, they'll continue to have zero or negative interest rates. The governments are still in debt. They're going to go more and more into debt, and eventually the whole thing's going to collapse, and then everyone's going to be screwed. They probably will start to outlaw even buying gold and silver, and even the availability of hard gold and silver right now has really been very tough. The U.S. Mint just stopped again. They ran out of silver. It's a number of places in Europe, they're not even selling gold or silver anymore. So if you haven't gotten into precious metals or hard assets, or gotten out of cash or whatever you're in, I suggest you do it quite quickly, especially if you're an American. Now they've got the Foreign Account Tax Compliance Act, FATCA, so it's very hard for you to transfer your money outside of the country now. It's very hard for you to have a bank account outside of the country. There's still ways around it, but they're cutting off every door right now, and I see that on a daily basis. And so this is not looking good. This is going to trap a lot of people, and a lot of people are going to get hurt.
We've interviewed some of the experts in the world on FATCA, and even they're shocked at the urgency of which this sophistication is being pushed through. And Hayden Perriman, one of the leading authorities on it, we have a full interview on the details, and you're absolutely right. It's getting impossible. But we've had, as you mentioned, ZIRP, zero interest policy, for at least 6 years, thereabouts right now. We're going to NIRP, negative nominal rates, with $5 trillion in bonds that are now trading, or at least it was, it may have fallen off a little bit here, at negative rates, which is the fear of God when you're willing to take a negative rate. But the only way you can get below zero and sustain negative interest rates is not to use cash, is to remove that ability. And I had Lacey Hunt on, and he says if they do that and they don't stop it, treasuries will do exactly what you just said. They will hold their own. They will create their own treasuries within a secure safe outside the bank. So it literally is a war, but it's unfolding right now. What does this mean then to cryptocurrencies, if I can call them that? Because I know you're an authority on Bitcoin and even BitGold.
If you don't know about cryptocurrencies, you should get into it. The people in Greece, if they had only just had a little bit of Bitcoin in the last few weeks, instead of waiting until, unbelievably, could you believe that the Greek people in general waited until the very weekend when they said they were going to close the banks to start lining up to take their money out of the bank. It's amazing how slow people are on these things. But if they had some Bitcoin, they would have been fine, and then they wouldn't have to be held hostage by the EU shutting down all their banks. They'd still have a currency to use. BitGold is another a good thing for that. It's outside of the banking system, and so they can't shut it. Well, they actually can shut BitGold down because it is centralized. Bitcoin, on the other hand, is totally decentralized. There is no Bitcoin office. There is no Bitcoin servers. So no matter what the government does, unless they turn off the internet entirely, they can't stop Bitcoin. And that's the beauty of Bitcoin. And it was very interesting to watch during Greece. Gold went down, silver went down, which totally makes no sense to me. And then Bitcoin actually rose from about 230 to 310 in about a week or two during the Greek crisis, which is what gold and silver, in my opinion, should have been doing. But you know very well that that's a very manipulated market.
Yes, and I stress the word very. And
very, very.
and today, some of the things that I'm seeing with $1.4 billion in gold being dumped on the market and driving it down. It's just today. And then I'm seeing people, the head of Majestic Minerals, going and taking it to CFTC and getting nowhere, talking about improving the level of manipulation. But that's for another show here. Jeff, what should investors really be doing? Can you kind of package some of these ideas and give them some direction that you're concluding?
I think it's really a time to be very cautious, very safe. I'm not looking for massive profits, although I do have some ideas on that. But it's mostly just getting some of your assets internationalized. So especially if you're an American, and it's very hard now, but it is still possible. We help people at tdvoffshore.com and tdvwealthmanagement.com. But it's a very tough business, and every week we see new legislation come in, which makes it harder for Americans to even get a bank account outside of the U.S. And again, looking at the Greek people, I think it's a great example because that is going to come to all of Europe. It's going to come to the U.S. in one form or another. Wouldn't it have been nice to have had a bank account in the Cayman Islands, which wouldn't be restricted to 60 euros a day withdrawal, or the bank's completely closed? Wouldn't that have been nice? And then wouldn't it have been nice if you had some Bitcoin? So Bitcoin's being it's still increasing in acceptance. You can buy almost anything with Bitcoin now. There's ways to do it. Just having those options outside of the system, and then of course precious metals, gold and silver. But again, don't keep it all in your one country, and definitely don't keep it in a bank safety deposit box, which I call an unsafety deposit box. Again, after Greece, they closed the banks and they said, yeah, you can't take out any cash or precious metals from your bank safety deposit box. So no, don't store a lot there. I would actually internationalize, and that's one thing goldmoney.com and things like BitGold are good for, is internationalizing your precious metals very easily.
Separate question, but I'm interested. What are you seeing in Mexico? How are all these things affecting the Mexican economy?
Well, the Mexican economy has been doing very well lately for the last few years. It's been so many people moving here. I see every week a car manufacturer moves here. A lot of it's coming from China because China used to be cheap 10 years ago, but now it's gone up about 5 to 7-fold in costs for employees and everything in the last 5, 6, 7 years. So it's cheaper to produce things in Mexico now. So there's been a lot of activity here. People have been moving their businesses here, and a lot of you hear about on the news like it's some sort of horrible third world violent, crazy, failed state. Well, it is a failed state to some extent, but that's why it's doing so well, because there isn't a ton of regulation, there isn't a ton of government involvement in your life. So if you want to start a business here, it's actually a lot easier than the U.S. now. So in that extent, it's been doing good. Of course, Mexico's been getting hurt by the weakening U.S. economy, and then of course there's all sorts of other things that are Mexico-centric. But Mexico's going to be hurt when this all happens as well, especially because of the amount of trade they have with the U.S. And I think the U.S. is going to be ground zero for the collapse. But I think the people here are more used to it. So, for example, they had their peso collapse in the 90s, and people lived through it. But Americans aren't ready for what's coming. They haven't seen it in their lifetime. And as you know, with half the people in the U.S. are on government assistance now, and a lot of those are on welfare and food stamps. When those EBT cards get shut down, I wouldn't want to be anywhere near any major population center in the U.S.
Yeah, Greece has their ATMs shut down. We'd also have our food stamp cards shut down, and boom, that's a bigger problem with 50 million. People don't understand. The reason we don't have food kitchen is everybody's got a card. Go to Walmart sometime at the end of the month, and you'll understand that one in gory spades. But what about further south into Central America and South America? You have a sense there where it's more not the manufacturing but commodity oriented economies, and commodities have been being crushed.
Well, I'm not sure about that. I don't know about every country in Central or South America, but I was recently in Colombia and it's booming. Medellin, Colombia is one of the best opportunities I've seen in the last year or so for an entrepreneur to move there and start a business. The economy's great. It's an amazing lifestyle. There's other opportunities in South America if you're looking for Chile's done very well over the last 5 or 10 years. It's getting quite expensive now. That's the only problem. So it's definitely not cheap. For cheaper places, I like Nicaragua. I think it's got a lot of opportunity. It's got beautiful areas for real estate developments and very, very cheap. It's probably one of the cheapest places in Central or South America. So, I look at all those sort of as opportunities. I think the two big opportunities in the world for trying to get ahead are in Asia and Latin America at this moment in time, and definitely not in Europe or the U.S. or Canada or Australia. I think those, or Japan actually, those places are all going down, in my opinion.
The developed economies that have built up a huge entitlement system and now have what I'll refer to as the baby boomers looking for their entitlements, and they're broke. And spilling out everywhere. If you really look at all those problems that are really coming to fore today, it's the pension issues. I'm thinking of Puerto Rico recently, Greece with the issues with the VAT and the pensions. I'm thinking of Chicago, Illinois. It's if you can't print your money as you can in a peripheral or state and local, you're seeing real issues that you can't get around right now.
Yeah, absolutely, and it's happening all over the place. And like you said, if you can't print money, but the places that can print money are going to continue to print money. So we're going to enter into some sort of a hyperinflation, I believe, at some point, or total collapse, one or the other. But either way, it's not going to be good, and you're not going to want to have all your money in a bank. You're not going to want to have all your funds in the stock market. You're going to want to be internationalized, have hard assets, be outside the system, because the systems are on the verge of collapse. And I do expect this fall something major to happen. Now, I don't know exactly what it is, but I've seen enough evidence to know that they're planning for something this fall. Who knows what it is? Maybe they're going to move to an SDR or something, maybe some sort of planned, who knows? I really don't have any idea, but to be doing things you did for the last 30 or 40 years, which is keep your money in a bank, invest in mutual funds, look forward to your Social Security check when you retire and your pension. All those things are going to be gone in the next few years. I can guarantee it. So plan ahead now for that.
It's a consistent message, by the way, Jeff, that we're getting with vast majority of the people that we've interviewed. Not that we've selected in that way, we've just asked the same questions. Everybody has got the same sense of extreme nervousness, and these are professionals that have been in the business a long time, have lived through 1986, 87, dot-com bubble, 2008, etc. So it's a pattern. We have to wrap. We're up against our hard line. Can you tell our listeners how they could follow some of the great videos that you put out, some of the highest quality on the web, and your writings?
Sure. If you just go to dollarvigilante.com, you'll find we have a blog there. You can put your email in, and we'll send you information every day, actually, covering this ongoing collapse. Also, I just put out a new video that people might like called Shemitah Exposed. And if you just go to surviveshemitah.com, you can find it now. It's really hard to spell. It's survive. SHEMITAH.com. You'll find the video, and it explains why I'm expecting a collapse this fall.
Well, maybe we'll have you back in the fall, and we'll see how it unfolded.
We'll see. We'll see.
Depending on what depends on what unfolds. All right. Anyway, all the best. Have a great weekend.
All right. Thank you, Gordon.
Thanks, Jeff. Bye.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.
You have all the major central banks, Japan, UK, Europe, America, all printing staggering amounts of money. The people who are getting that money, Jeff, are very happy, and their friends are very happy.
I believe in 2020 that we will be back into a rip-roaring, snorting bull market.
And no one's got the guts to stand up and say, you know, the truth. And the truth is it doesn't work. Printing money isn't working.
Government is always mankind's biggest enemy throughout human history. It always has been. It's what destroyed Rome. It's what every empire has collapsed, and every war and all the billions of people have been killed. It's all due to government. So it is always our enemy.